Hello everyone, and thank you for joining today's True Trading webinar. I am excited to be here with you. My name is Mohammed Azim from Traders United. Just disclaimer, true webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at elite wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the main session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. Okay, let us start with the consumer price index, also known as CPI, Y over Y, related to UK, and I'm going to focus on the GBPUSD currency pair. Okay, what is the consumer price index? The consumer price index, Y over Y, stands for year over year. It's just a short name and abbreviation. The CPI, year over year, measures how much the average price of goods and services in the United Kingdom has changed compared with the same month last year. It is the primary gauge of inflation in the UK. Higher than expected CPI can support the British pound as it signals rising inflationary pressure and increases the likelihood of tighter monetary policy from the Bank of England. Conversely, lower CPI suggests easing inflation, which may push GBPUSD lower. Now, the date and time is November 19th. Today is 25th November. So, this is the previous week review I'm doing. So, on November 19th at 7 a.m. UTC time, we got the CPI financial data report. The previous number was 3.8%, forecast is 3.5%. The actual number we got is 3.6%. And the pair we are going to focus is the GBPUSD currency pair. The UK CPI data was released on November 19 at 7 a.m. UTC time. Forex markets were watching. Forex markets were watching closely for signs of inflation pressure and clues on the Bank of England's future interest rate decisions. The actual reading came in at 3.6%, slightly above the forecast at 3.6, 3.5, suggesting that inflation remains somewhat sticky. Despite the higher reading, GBPUSD moved lower after the release, indicating that the market may have interpreted the data as not strong enough to shift the Bank of England's overall policy outlook, or that broader market sentiment favored US dollar strength at that time. The recent inflation trends in the UK has been mixed, with housing costs, consumer demand, and energy prices contributing to fluctuations. A stronger than forecast reading, meaning 3.6%, indicated inflation is still elevated but not enough to change market expectations of cautious Bank of England policy. Markets may have already priced in a slightly higher reading, limiting bullish GBP reaction. The downward move in GBPUSD currency pair that we got after the release suggests traders focus more on broader risk sentiment or the relative strength of the US dollar. Let me show you the chart of GBPUSD currency pair. So this is the GBPUSD currency pair daily time frame. Let me zoom out a little bit. So this was the expectation, and we got the drop in price action of GBPUSD currency pair. Now it's possible that price action just keep falling down, down, and down. That's also possible. And for the upside, if we do get a bullish breakout, then market is probably going to rise up more. Okay, otherwise I expect further weakness in price action of JPUSD currency pair. And after the news announcement, we also got the drop in pound dollar currency pair. As far as the market number is concerned, the number we got with the CPI is 3.6%. That is above the forecast level. Now, despite the higher reading, the GBP USD initially attempted to strengthen, but the overall drop we got in pound dollar currency pair. Now, the possible reason for the decline is market expected an even stronger CPI reading, and forex traders doubt immediate Bank of England tightening. Also, the broader US dollar strength overshadowed GBP USD data. Now, previously we were expecting that if we get a number that is greater than 3.5%, then we might get a bullish price action GBUSD currency pair. And we got a 3.6% number. But the way I see market participants were actually expecting not a 3.6%, but maybe a 3.7 or 3.8% number. So to me, the trend is still down in pound dollar currency pair. So initial spikes are, common, followed by a second wave of movement once forex traders position themselves. The British pound showed downward momentum on November 19th, despite the higher CPI reading, highlighting the importance of monitoring both technical structure and macro economic events. As far as the technical structure is concerned, it's a downtrend going on inside daily chart of GBPUSD currency pair. So the key takeaway is the CPI Y over Y remains one of the most important indicators for the British pound. Even a slightly stronger result this month did not support the GBPUSD, providing that context, expectations, and market sentiment play a major role in determining direction. Next one is the German flash manufacturing PMI related to Europe, and I'm going to focus on euro dollar currency pair. Now, what is the German flash manufacturing PMI? The German flash manufacturing PMI provides an early estimate of manufacturing activity in Germany. It is based on surveys of purchasing managers evaluating production levels, new orders, employment trends, supplier performance, and overall business sentiment. A reading above 50 suggests expansion in the manufacturing sector, while a reading below 50 signals contraction. Stronger than expected PMI data typically supports the euro as it reflects healthier economic conditions in Germany and the broader eurozone. Weaker data can pressure the euro and influence short-term euro dollar movements. Now, the previous number was 49.6, forecast was 49.8, and the actual number that we got is 48.4 on November 21st at 8:30 a.m. UTC time. Now, if you take a look at a price chart of euro dollar currency pair, we got this kind of a bullish breakout. This is what I was kind of expecting. And I was also expecting the market to drop and try to retest this broken trend line. We got this bullish breakout over here, and now market is again trying to find support over here, which could fail as well, by the way. It could, just keep falling down as well. and this whole thing could turn into a false breakout. That's also possible. Okay. Now, the Germany's flash manufacturing PMI was released on November 21st at 8:30 a.m. UTC time. As Europe's largest economy, Germany's manufacturing performance is a crucial indicator of overall Eurozone economic momentum. The actual reading came in at 48.4, below both the previous figure and market expectations. This confirmed ongoing contraction in the sector and signaled further weakness in industrial activity. Following the financial data release of the PMI report, the Euro USD actually moved lower. If you take a look at a price chart of Euro dollar, so over here we got this report and Euro dollar actually moved up. Now today it's actually trying to rise up a little bit, but on November 21st we got the drop overall, and this is the daily time frame bearish candlestick over here. So following the release, Euro USD moved down, reflecting bearish sentiment towards the euro as forex traders reacted to softer than expected economic data. The Germany's manufacturing sector continues to face headwinds from global economic uncertainty, declining export demand, and ongoing cost pressures. Although some analysts expected mild stabilization, the reading of 48.4 indicates that contraction remains persistent. Now, the key points from the release is the weaker than forecast result highlighted softness in the manufacturing recovery, and the forex investors interpreted this as a sign that Germany's industrial sector remains under pressure. The euro struggled as expectations for stronger economic momentum faded. This combination contributed directly to the downward move in euro USD after the data was published. So the market reaction that we got is we got the drop in the market in the price action of euro dollar currency pair, and the actual PMI number we got is 48.4, which is below the forecasted level and even lower than the previous number as well. So manufacturing contraction deeper than expected. This is what we got. The euro sentiment turned bearish, and overall euro dollar consumer moved lower after the German flash manufacturing PMI report. Now, the possible reasons for the decline is market anticipated a figure closer to 50 near expansion. The weaker result reduced confidence in Eurozone growth. Broader risk of sentiment supported the United States dollar, and forex traders priced in limited optimism for ECB tightening. So if we manage to get a number greater than 50 or somewhere near 50, then we might have seen a bullish rise in euro dollar currency pair. But that's not the case. The number is 48.8. It's less than the forecasted level. The forecast was 49.8. So due to this reason, euro turned bearish, and we got a drop in price action of euro dollar currency pair. So overall analysis is the Germany flash manufacturing PMI offers an early and influential look at economic conditions in the German economy. It often sets the tone for Euro USD moves, particularly when the result significantly diverges from expectations. This month's reading of 48.4 was clearly weaker than forecast, leading to immediate euro weakness and a downward move in euro dollar. The data reinforced concerns about the pace of industrial recovery and contributed to a cautious market outlook. So the German flash manufacturing PMI remains a critical early indicator for euro dollar, and this week's weaker than forecast reading pushed the euro USD lower, demonstrating how even moderate surprises can shift short term market sentiment and reshape expectations for Eurozone economic performance. Now, let us take a look at previous week global market trends, and I'm going to take a look at Euro dollar currency pair as well as US dollar Swiss franc currency pair. So let's go over to the Euro USD first. This is the weekly time frame of euro dollar currency pair. Over here we got this breakdown, and after that we got kind of overall bearish decline in price action. So we have this support over here at 1.1390 over here. And the way I see market is trying to move sideways, it's possible that we might get a bullish rally in Euro USD, or the way I see market could keep going down as well. So currently Euro dollar is finding support over here. This was a bullish breakout, and now market is retesting this trend line at a pullback area. If it fails, then euro dollars continue to drop lower. Next one is the US dollar Swiss franc. US dollar Swiss franc, you see we got this breakout, and this is a bullish breakout, and euro USD is going down and USD Swiss franc is going up. They move against each other. So if you take a look at the daily chart of US dollar Swiss franc, US dollar Swiss franc is trying to rise up over here. Okay, so this looks like to me a bullish scenario, and it's quite possible that in coming trading days US dollar Swiss franc is probably going to move higher. Next, let us take a look at current week macroeconomic events and data releases. I'm going to take a look at consumer price index CPI related to Australia, and next one is the GDP report, gross domestic product, month over month related to Canada. So let me talk about the current week's macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. So let's start with the first one, Consumer Price Index, CPI, year over year related to Australia. The currency pair I'm going to focus is the Aussie dollar currency pair. Now, what is the Consumer Price Index year over year? The Consumer Price Index, also known as CPI, year over year measures how much the average prices of goods and services in Australia has risen compared with the same month last year, or same year last year. Okay, it is the most widely followed indicator of inflation and directly influences monetary policy decisions by the Reserve Bank of Australia, also known as RBA. A reading higher than expected usually strengthens the Australian dollar, as it suggests rising inflationary pressure and increases the likelihood of tighter Reserve Bank of Australia policy. A lower than expected CPI reading indicates easing inflation, which can weaken AUD-USD currency pair. Because inflation plays a major role in shaping interest rate expectations, this indicator often triggers noticeable market volatility. Now let's talk about the event details. The Consumer Price Index, also known as CPI, and we will get this financial data report on November 26th, and the report is going to be released at 12:30 a.m. UTC time. The previous number we got was 3.5%. Forecast is 3.6%. The actual data not yet released. It's going to be released on November 26th. The Forex market is closely monitoring Australia's CPI reports scheduled for 12:30 a.m. UTC on November 26th. Let me show you the chart of Aussie dollar currency pair as well. So here's the chart of AUD-USD currency pair. The trend is bearish over here. You can see this is the weekly time frame. Long-term trend is down. If you check out the daily trend results are down over here. It looks quite bearish. We got this breakout, bullish breakout over here. Then market tries to retest this level, rallied up a little bit, failed to print the new high, and then dropped lower over here. So the way I see AUD-USD is probably going to slide much lower. The forecast that we got was 3.6%, suggests expectations of slightly higher inflation compared to last month. Forex traders will be evaluating the data for confirmation of persistent price pressures or signs of moderation in Australia's economy. Given the Reserve Bank of Australia's careful approach to managing inflation, balancing slowing economic activity with elevated price levels, this CPI release has the potential to shift market sentiment quickly. Australia has recently experienced mixed inflation signals across sectors, with housing, energy costs, and essential goods contributing the most to price changes. While inflation has generally been slowing, certain categories continue to show resilience in the Australian economy. So the forecast is the CPI numbers are probably going to be greater than 3.6% or equal to 3.6. That's the forecast. And if we do get that number, then the AUDUSD currency pair is probably going to show some upside. And let's say the CPI comes in below expectations, that signals easing inflationary pressure and may reduce expectations for further Reserve Bank of Australia tightening, and this could trigger short-term weakness in the AUD-USD currency pair, and market is probably going to drop. Okay, and let's say market meet the expectation, we get a 3.6% number, then the way I see AUD-USD currency pair is probably going to move sideways. Forex traders should not only focus on the headline number but also consider broader inflation narrative, sector level contributions, and how the Forex market interprets the Reserve Bank of Australia's policy path. Even a modest deviation from the forecast can lead to sharp price movement, especially during low liquidity hours such as the early session release time. So I basically expect increased volatility around 12:30 a.m. UTC time on November 26th in AUD USD currency pair. So AUD USD currency pair may see immediate spikes within the first minutes, followed by a secondary direction move as traders digest the details. In the event of a strong deviation from the forecast, liquidity gaps and rapid price swings are possible. So forex traders should be prepared for fast-moving conditions and consider both technical and macro factors when playing when planning entries and exits. So the key takeaway is the Australian CPI year over year is a crucial and critical driver of interest rate expectations and a major catalyst for AUD USD price movement. With the forex market expecting a slight rise to 3.6%, any surprise either higher or lower could significantly influence short-term sentiment and forex trading opportunities as well. Next one is the gross domestic product, also known as GDP report, related to Canada, and this is the month over month report. So what is GDP? What is the gross domestic product? The gross domestic product, also known as GDP, month over month measures how much the total value of goods and services produced in Canada has changed compared with the previous month. As one of the most important indicators of economic performance, monthly GDP offers a timely snapshot of short term growth momentum in the Canadian economy. A stronger than expected GDP reading typically strengthens the Canadian dollar as it signals robust economic activity and may influence the Bank of Canada towards maintaining or tightening monetary policy. A weaker than expected GDP reading signals slowing economic conditions, reducing expectations for future rate hikes, and often pushing USD-CAD higher. Because of its significant impact on Bank of Canada policy expectations, monthly GDP releases often generate noticeably volatility in USD CAD currency pair. Now, the previous number we got was minus 0.3% number. The forecast is 0.2%. The actual data not yet released. It is going to be released on November 28th at 1:30 p.m. UTC time. So forex traders are closely watching Canada's monthly GDP report scheduled for release on November 28th at 1:30 p.m. UTC. After a previous reading of minus 0.3%, the market is expecting a rebound to 0.2%, suggesting moderate recovery in economic activity. Let me show you the chart of USD CAD currency pair. So here's the chart of US dollar versus Canadian dollar. The way I see USD CAD is trying to rise up over here, and it's probably going to rise up even further. We're getting a nice bullish trend channel over here. If I zoom out a little bit, you can see the USD CAD just keep pushing high over here. So it's probably going to move up a little bit further as far as the trend is concerned and the technical analysis is concerned. The GDP release is particularly important as Canada has faced slower growth in recent months, pressured by high interest rates, weaker consumer spending, and softer export demand. Markets will be looking to see whether the economy is stabilizing or if further weakness is emerging in Canada. Given the Bank of Canada's careful stance on inflation and economic balance, this GDP report has the potential to shift USD-CAD sentiment quickly. Now, the recent economic data that we got in Canada has shown mixed signals. Manufacturing and retail activity remains sluggish. Services growth has been uneven. Housing markets are cooling due to higher borrowing costs. So the forecasted rebound to 0.2% suggests expectations that economic activity picked up modestly in the latest reporting period. Now, let us take a look at different market scenarios. The first scenario is, let's say the GDP number we get is 0.2%, then I think that meets the expectation. Market is probably going to move sideways. If we get a number that is greater than 0.2%, that indicates improving economic conditions in Canada, suggests the Canadian economy is more resilient than expected and increases the likelihood of the Bank of Canada maintaining a firmer policy stance. So that would be the bullish for the Canadian dollar, and the USD CAD currency pair may move lower. But as of today, this bullish trend channel suggests that USD CAD is probably going to move higher, which means weakness in Canadian dollar and strength inside US dollar. And let's say we get a weaker than expected GDP number, like less than 0.2% number, that signals continued economic softness or contraction and may push the Bank of Canada towards a more cautious or dovish stance, and that would be bearish for CAD. So USD CAD may move higher. Well, it's already going up. So these are the possible market scenarios. The Canada's GDP month-over-month release is one of the most influential economic indicators for the Canadian dollar. It provides direct insight into the economy's momentum and shapes expectations for Bank of Canada policy decisions. With the previous reading showing a contraction of minus 0.3%, markets are anticipating a mild recovery. Any deviation from 0.2% forecast could trigger sharp short-term moves in USD CAD. Forex traders should pay attention not only to the headline number but also to the details such as sector contributions, goods versus services growth, manufacturing and energy output, consumer spending patterns. So these factors help guide market expectations beyond the initial reaction. So I would say, expect market volatility around 1:30 p.m. UTC time on November 28th. So USD CAD may see fast direction changing moves depending on the surprise factor. The initial spikes can be followed by secondary moves as forex traders digest the breakdown. And those trading event should monitor spreads, liquidity, and market bias before entering in the market. So the key takeaway is the Canadian GDP month-over-month release is a critical event for USD CAD currency pairs, currency pair traders, with expectations set for a small rebound. Any surprise, either strong or weak, can significantly influence short-term market direction and shape expectations for future Bank of Canada's decisions. Next, let us take a look at current week global market trends. I'm going to discuss the euro dollar and Aussie dollar currency pair first. So first one is the euro USD. The way I see, we got this drop in the market, and it could, it could just keep going down, or we might get a bullish breakout. I would say price action is only going to move up if we get a bullish breakout, something like this. Let me show you what I mean by that. So if we draw this trend line over here, if price action is going to show us a bullish breakout over here, then there's a strong chance that euro dollar is going to rise up. Otherwise, it's possible that as long as price action is staying below this magenta line, it's possible that market is going to keep falling down and down in euro dollar currency pair. And I would say at this point in time, it's a good idea to look for potential bearish direction. If you take a look at the daily chart, market is trying to bounce over here, but so far we haven't seen much success over here. So this bounce could fail, and price action just keep going down as well. That's also possible. Okay, next one is the Australian dollar, AUD USD. AUD USD, we got this bullish breakout, which kind of failed over here, and market is now trying to drop. So the way I see, Aussie dollar currency pair is most likely going to show some weakness over here, and we might get further drop in price action of AUD USD currency pair. It looks quite possible the price action is going to drop lower. Next one is the US dollar versus Canadian dollar. USD-CAD currency pair, the trend is bullish, and the way I see, I expect further upside in uh, US dollar versus Canadian dollar currency pair. So if we take a look at these two bullish trend lines over here, okay, see price action just keep trying to go up over here. Next one is the spot gold. Spot gold trend is bullish, but we got this kind of a spike over here. So the way I see the price action of XAUUSD currency pair, trading instruments probably going to move sideways, and then I expect further weakness in price action of spot gold. Okay. Okay, if you have any questions or comments, feel free to type inside the chat box and I will be happy to answer your questions. So what we have learned today? Well, we discussed about the consumer price index CPI related to Australia, and I also discussed the gross domestic product related to Canada. Then we also take a look at euro dollar, AUD USD currency pair, USD CAD, and spot gold. These are the assets to watch out for profits. What you should do next, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. And if you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, December 2nd, 2025 at 12 p.m. UTC time. So that's it for the time being from my side. Have a nice day and bye-bye.